Welcome to the Strategy of the Week presentation for this week titled Selling with the Midas Touch. My name is Todd Shaffer. I'm the Manager of Research for VectorVest, and I'll be your presenter this evening. Tonight's presentation is a follow-up to a presentation we made previously on the 15th of November 2013. It was titled Protecting Profits with the Midas Touch. In this presentation, we demonstrated using the Midas Touch graph layout to help us identify when to sell individual stocks. It was predicated by an essay from Dr. DeLito. The salient points read in part, I also discovered that the Midas Touch not only gives me a great way to know when to buy a stock, but it also gives me a great way to know when to sell. The key is the 40-day moving average of RT. If it has peaked and is heading lower, I'll add price to the graph. If price is below a recent high and trending lower, I'll know it's time to protect and/or take profits. Tonight, I'll demonstrate an alternative method that's been developed by Dr. DeLito, particularly useful if you struggle at all with interpreting price graphs. Let's move into the program and begin with a quick review of the concept. We'll begin by setting up our time frame. We'll go from our home page here to a market timing graph by clicking on the Graphs tab. Here you can see we've set up a market timing graph in its default layout with a 1-year time frame. We're going to use the same time frame that we used in our previous demonstration. That was using the green light buyer timing system, so we'll put those timing signals on the graph. Then we used a time frame between October, the first green light in October, and the confirmed down call of November 2013. And to further simplify the graph, let's take off the subgraphs of MTI, buy-sell ratio, and RT, and we'll put on the high and low markers for this time frame. And the question we posed originally was, how might we mitigate some of the losses that we incurred in the stocks in our portfolio as the market pulled back from this high until we eventually got our confirmed down call? Well, as the name implies, the solution was to use the Midas Touch graph layout to identify stocks whose upward price momentum had broken. So to begin the demonstration, let's build a list of the top 10 VST stocks from our first green light on the 11th of October. We'll come up to the top and click Viewers. We'll open the stock viewer and we'll set our date to 11 October 2013. Here we have the list of stocks in VST descending order. Let's move our frames around a little bit. Here we can see our sort is by VST descending, and so these were the top VST stocks from the 11th of October. I'm going to use my quick graph button to graph not the top 1, but let's graph the top 20 of these stocks. This is our standard stock graph, and on it you can see we have graphed now the price of the stock in candlesticks. We have a 40-day moving average of that price, and on our subgraph the relative timing or the short-term price trend of that stock's price. At VectorVest, we advocate that we want to buy stocks that are moving from the lower left to the upper right. The smoother the price pattern, the better. Additionally, we like to see relative timing or a trend strengthening with that rising price. In fact, falling or flattening RT action can be a precursor to a pullback in the stock price action. And if we flip through a couple stocks, we can kind of look for that action of how that flattening RT or that contrarian trend in the RT can be the precursor to that movement. So this was a great time to be buying the stock, and as it flattened out, we want to get more and more careful. Again, that rising RT trend, it flattened out, failed to hit a higher high as a precursor to that reversal. And we can see that behavior over and over again. Moving averages help us filter out the quote-unquote noise and determine the true direction of an indicator, often on price, as we have here on our standard graph using the 40-day or 40-period moving average, but also on other indicators, in this case, or in the case of the Midas Touch graph, also on relative timing. To add a moving average to any indicator in the VectorVest graphing tool, simply right-click on the indicator, hover on Add a Moving Average, hover on Simple Exponential or Weighted, and then choose the moving average. In this case, I've chosen a 40-period moving average or a 40-day moving average on RT. And simply by clicking the box, I'll overlay that moving average on RT. And so as we scroll through some of these graphs, we see now that it does a very nice job of smoothing out that noise in the RT line, the sawtooth in the RT graph line. In fact, it was just for these reasons, smoothing out that volatility, that we developed the Midas Touch graph layout. We wanted to originally smooth the erratic price action of gold stocks, but it works on any stock chart. If we come to our layout tool and click Graph Layouts, we can select Midas Touch, which is the default layout. Left click on it, and we can apply the Midas Touch layout to our graph. In our parameter window, we see the items with a check mark correspond to the items that are graphed. And so we have moving averages of stop price, both a 10 period and a 65 period. Because we're on an end of day graph, those will be 10 and 65 days. So that's the moving average of our stop price, which is based on a 13-week moving average. So a moving average of a moving average, relatively slow, and a 40-day moving average of RT on our subgraph. Notice that we're looking only at the moving averages, not the underlying RT or price themselves. And with these longer look-back periods, this does a very good job at finding trending stocks. In fact, we like to cherry-pick stocks with all three moving averages sloping upward, hitting new 3-month highs, because that's a period when price is rising and we're building momentum in that price action. For this particular presentation, we're focusing on how to manage the positions once we own them. Our selling technique uses the behavior of these moving averages to identify when trending stocks in particular start to lose their momentum. So once we own our stocks, let's make some modifications to this graph layout. In particular, let's put price on the graph, and let's take off those moving averages. And let's change the time frame of our graph to match that of our study, from October to the end of November. And let's scroll back up to the top of the list, and let's put on our market timing signals. Remember, we entered here on the 11th of October. Our market timing exit was the confirmed down call, and we're trying to save as much of this pullback as we can. And so last time we demonstrated a technique looking for a pullback in the relative timing moving average as an indication that RT had started to trend downward and that momentum had broken. And so if I insert a date line at what looks to be the peak, as I slide it forward, if we look at the RT moving average value to drop, that would be an indication that it had started to pull back. And of course, this is the time to become defensive on our stock positions. But sometimes it's difficult to see small changes in the moving average slope. And as we saw in this case, with the rounding of the moving average value, sometimes the line appears to move although the value hasn't. And so for some of us would prefer to have a more definitive signal. Sometimes if we're trading more volatile price movement, we might prefer a faster signal, understanding that a fast signal is always a compromise between sensitivity and false signals. And so trying to identify a change in price trend as opposed to just a pullback in price action, in our previous presentation we suggested you might consider adding a shorter term moving average to the RT moving average signal to help in this matter. To do that, we go back to the RT because that's what we want to create the moving average on. If I right click, hover on add moving average, a simple moving average, and let's click a 10. But I'm going to adjust the 10 to a 5. So this is looking at 5-day moving average of RT, a very fast signal. And if I click on it, I can superimpose it over the moving average of RT. And so in this instance, then the short-term 5 moving average crossing below the 40 would be our exit signal. And one of the benefits is this gives you a definitive signal when those moving averages cross over. Now, nothing works every time, so you want to do some experimentation to decide if on balance you like this technique. And so let's scroll through some of our graphs and see when we would have exited. This was a nice exit as price climbed and then plateaued just before it broke to the downside. It signaled our exit. Here we exited probably about even with where we got in. Here again we were able to lock in that gain. In this case, the moving average kept us in until the day of our confirmed down call, as it did for GBT. REA had us out here as price flattened out. TTN had us out early as we had this price action flatten out before we had two big candlesticks. We left a little bit of money on the table, but we did lock in a gain, as we did again on SKE. Bank of Queensland, we stayed in it until the confirmed down call. And so you get the idea. As we scroll through these graphs, you can quickly see an exact exit point. Another technique we can employ to speed it up even a little bit more is to use two shorter term moving averages, say a 5 and a 10. So let's go in and create a 10-day moving average of RT. And I've scrolled this back up to the top and changed the color so that we have the 5 days green and the 10-day yellow. And if we change to our crosshair cursor, of course with the same entry date now, we would have exited here. Next graph. This gets a little harder to see as we jumble together here. You might have closed out at that point or waited for real separation to happen here. In any case, we were able to maximize those gains. We exited here. Exited here. Exited here. That's a very nice run. And so you can see they crossed a little earlier than the 5 and the 40. Do you like that better? Once you find your perfect mix, then you can save your graph layout to quickly check your portfolio every night. If this was my perfect mix, I'd come up to my Layouts button, click the Save Modify Layouts button, add a new layout, and I might call this Midas Touch Cell, and click OK. Now, whenever I need that graph, I simply scroll down to it in my list, and I can immediately bring it up. And of course, the benefit to this approach, as so nicely demonstrated here with Tribune Resources, is particularly on trending stocks. I'm trying to avoid taking action on every little price pullback. I want to identify when the trend is broken, and for that, RT is a great indicator. With that, we'll conclude our presentation for this evening. I do thank you for being with us, and I hope we've given you some food for thought on some easy ways to become more effective in the VectorVest tool. Until next time, have a great weekend.